Forex market trends, where price action meets precision. Think you understand trends? Most traders don't. They see an uptrend and buy only to get shredded in a reversal. That's because a trend isn't a monolithic force, it's a living, breathing cycle with distinct tradable phases. Identifying which phase you're in right now is the difference between catching the meat of the move and being used as liquidity by the smart money. Let's cut through the basics and get tactical. In institutional flow analysis, we break every trend into 4 critical phases: accumulation, markup, distribution, and markdown. Forget simple higher highs and lows for a second. The accumulation phase is where it begins. Price moves sideways in a range, often after a prolonged decline. Volatility contracts. The news is likely bearish and retail sentiment is exhausted. This is where informed buyers, the big players, are quietly building their core positions. Your job is to identify the range and watch for a decisive breakout above its resistance with strong volume, signaling their readiness to drive the move. Then comes the markup phase. This is the trend you love. It's characterized by sustained, impulsive price moves. Higher highs and higher lows in an uptrend, strong momentum candlesticks, and shallow, predictable pullbacks that find support at key moving averages or Fibonacci levels. This is the phase for running your profitable positions, adding on retracements, and managing trailing stops. But it doesn't last forever. The distribution phase is the mirror of accumulation. Price action slows, starts to churn in a new range near the highs. The news is euphoric, everyone's bullish, but the price struggles to make significant new ground. This is where smart money is offloading long positions to late-coming retail. You see divergence on your momentum oscillators like the RSI or MACD. Your play here is to protect profits and prepare for a reversal, not to buy the top. Finally, the markdown phase begins the downtrend. It's the inverse of markup, with impulsive bearish moves and weak corrective rallies. This is where you either short the rallies, stand aside, or if you're still in a long, you've likely already been stopped out. The cycle then repeats. Master this framework. Don't just see the trend, diagnose its phase. It will transform your timing, your risk management, and most importantly, your patience, letting the market tell you when to be aggressive and when to step back. If this breakdown clarified the market's rhythm, hit like and subscribe. We dissect advanced concepts like this every week. To go deeper, check out our video on volume profile and order flow in the description below. What phase do you think the Euros is in right now? Tell me in the comments. Till next time, trade the phase, not just the price, says Forex Market Trends.